All right, all right, all right. What's up? What's up? What's up? Let me turn this music down. All right, all right. So we had a market sell-off today. We had a market sell-off today, and it was bad. And I told you guys it was coming. Why? Because cyclically, all right, cyclically. Try to say that 3 times in a row. All right. Cyclically, this is what happens every September, right? If we have a great year, most of the time, the market will push up right around May, June. Summertime starts. The market starts to come in a little bit. Apple usually releases its products, and that usually starts the sell off. Then the market usually sells off September, October. We come back in, we buy the market up September, October, and then we rinse and repeat, and we do that over and over again every single solitary year. Why? Because most of the tech companies that are out there, most of the e-commerce companies that are out there, the retail companies, they make all their money at the end of the year. So you usually see what we call a Christmas rally towards the end of the year into Christmas, especially if we had a decent year. They release their earnings 3 months later, which is January, February, March, right? And then everybody gets hype off of the earnings that comes out, and this is the next best thing. And then the market shoots up, shoots up, shoots up. Your short sellers are mad because they didn't make money. We give them a nice little short squeeze right before the market sells off. All right. And typically that's what happens. Every now and then you'll get every now and then when a country comes out with information like Brexit, or when Venezuela was going through its issues, sometimes it might affect the market. The timing of this was kind of perfect because the market wanted to sell off in September anyway, right? The market wanted to sell off in September. I've been telling y'all that it's going to sell off. And then China came out with their news. So it was a perfect time for anybody, including myself, if they wanted to take profits because we had a great year, this is the time to do it, right? Now, when these big hedge funds and pension funds take profit, guys, they're not like you and I. They're not going to sell everything. I didn't even sell everything. I sold about 30% of my portfolio 2 months ago. I sold all of my Bitcoin, a week and a half ago. About 2 weeks ago, I sold, all of my Bitcoin. I didn't sell all of my crypto though, right? I sold about half of it, right? So I took profits because that's what money managers do, especially when they have a big year. They take profits, and then what they do is they let the market come in, and then they reinvest those funds, right? They're active, but they never completely get out. You always want to keep a core position in a stock that you're in so that you won't be that individual that says, dang it, I could have bought Amazon when it was $20 and now it's 3,000, right? And I had 20 shares. Well, you won't feel so bad if you held on to one. So I always tell people when you're investing, and I have a core index that I have where I'm invested in 50 companies. And in that core index, you're going to see a lot of those companies over here. I'll skip over some that I'm really not invested in, but we're going to go through my stock star list. Pretty much all the stocks that I'm invested in is on this list. I'm going to try to get to all 50. That means I'm going to be going at lightning speed analyzing these stocks, which is what you guys should do also. And I'm going to start with the letter A, and I'm going to work my way down. So if your company is the letter W or Z, you might want to go take a break. All right, I'm gonna try to finish this in less than about an hour and a half. I figure if I can do a stock a minute, I can get this done in 60 minutes. But y'all know I be ranting and going on and on, so I might not quite be able to get this over with by 9:30. I know a lot of you guys got to go watch Monday Night Football, including myself. So I'm gonna try to get this done as fast as I possibly can. Now, what are we looking for? All right, let me explain. There's some newbies that are on here, so I'm sorry, guys. I gotta educate because that's what I do. Joel breaks down everything in its most simplistic way. So I love to buy fundamentally good companies. That means companies that are doing well, and I like to buy them on sale. All right. So I like to buy the Apples, the Amazons, the Googles, the Facebooks. Why? Because we know that at least once a year, once or twice a year, stocks are going to drop to their 200-day moving average. So let me educate while we're looking at, let's pull up a clean chart. And we have the Thinkorswim chart set up that's up right now. So before we even start, let me put out my products out there. All right, so we're on the Thinkorswim platform now that's offered by TD Ameritrade. For those that don't have for those looking for accounts or looking for platforms that they need to use to be able to analyze companies, I always tell people, why not go with the best? All right, Thinkorswim is offered to TD Ameritrade clients, and I really, really love I really love this platform because I have access to pretty much all the stocks that are out there. If you're on Robinhood or if you're on certain brokerage platforms, you might not be able to buy everything that's out there. You can pretty much buy every stock that's available on the New York Stock Exchange if you have the Thinkorswim or the TD Ameritrade account. But you're also going to have access to pretty much every indicator that you've ever heard of. All right. If there's an indicator that you hear about, you're going to be able to find it on the TD Ameritrade platform. It's the Bentley of all platforms, and it doesn't cost any money to have it. You just need to open up an account. Go put $50 in a TD Ameritrade account. You're going to have access to everything. All right. So this is the TD Ameritrade platform. Now, when we go through the platform, there are going to be things here that you're not going to, it's going to look overwhelming to you. So I do have a video that I have available to you guys. And in that video, you're going to be able to, in that particular video, you're going to be able to make your platform look like mine. So once you open up your TD Ameritrade platform, once you download the platform onto your computer, not the web version, you're going to be able to set your account up to look like mine so you can download this Thinkorswim chart setup. You need to go to payhip.com/whatwould to find my products, or you can go through my app. Hold up, where are we? Where's preview? Oh, there it is. You can go through my app, and through my app, you'll also be able to purchase a lot of my products, okay? So if you don't have my app, go ahead and download it now. It's free. You might as well download it. How many trader investors you know out there with an app? I have one for education and for classes. So anybody that's interested in the stock market, they're a newbie, they're advanced traders. I train them all. I'm a consultant. I'm a one-stop shop, so you have everything. I have everything available for you, and they're affordable. And I made it affordable so that any and everybody can get educated on this market that has been making us rich the last 10 to 20 years. All right, so let's get back to business. So we're going to talk about the 200-day and the 50-day moving average. Why? Because the 200-day moving average, we're going to erase everything, is how we determine where to buy a stock on sale. So I'm just going to quickly explain to you guys what we're looking at. This is the 200-day moving average, which is this blue line. This is the 50-day moving average, this red line. This light little gray line is your 20-day moving average. Why am I showing you guys these three moving averages? Because these are the moving averages everybody on the planet are using. Everybody on the planet. So if you don't know what these averages are, you need to call up your teacher or whoever you took a class from and said, hey, teach, why didn't you teach me the basics of the basics of the basics of investing and trading? All right. And then if they don't know what you're talking about, say, hey, you need to take some courses with What Would Joe Do so you can learn how to teach your students. All right. So the 200-day is what traders are going to use to figure out if a stock is bullish or bearish. You don't have to go flip to 50 different charts to figure out if a company is bullish or not. If it's above this 200-day, that means it's bullish. If it's below it, it's bearish. You also want this line to be arcing upwards because momentum stocks go from the left side of your screen to the right side. They don't go sideways. They go from the left corner of your screen to the upper right. Those are the type of companies that you want to invest in. Because if you were just using these three little lines, I don't know why you guys make investing and trading so complicated. The 200-day is the longer time frame. It only hits the 200-day once or twice a year. So I know a lot of you guys have been waiting for companies to come back and hit the 200-day moving average. If you notice, this is the S&P 500. The S&P 500 represents the market. The market is the S&P 500. Why? Because the S&P 500 represents the 500 largest companies in America. This is how they're all doing collectively. They created an index so that you can know exactly how the economy is doing. Well, as you can see, we haven't hit the 200-day moving average since this date right here, which is June of this year. All right. Before that, because this well, we can say we were underneath the oh, this is the March lows. All right. So the March lows happened. The 200-day was angled up. That's how we all knew to buy the S&P 500 on sale. Then once we got above it, a lot of you guys that missed this move, you could have bought the S&P 500 again at this mark at the 200-day, at this mark at the 200-day. And then we haven't seen the 200-day moving average since June. So it's July, August, no, June. What is this, June 2020? We haven't seen the 200-day moving average in over a year. We usually touch the 200-day moving average at least once a year. So guess what, guys? That's where I think we're going. Why? Because we do it once a year. So if you're thinking about investing in the market, you could have bought some today. I actually think that we're coming down to here. So I'm going to set an alert for myself right around this 420 range, because if we get to 420, we're going to hit that blue line and Joel is going to buy up the market. All right? That's an alert. Why did I set an alert? What is an alert? An alert is how I'm able to look at over 50 stocks at one time and pretty much know when they're all on sale. And how I get alerted is by text. So I'm going to get an alert when this stock reaches this price. I'm going to get an alert, and the alert is going to say, Joel, finally, you've been waiting for a whole year. It's time to buy. Because a lot of you guys don't know when to buy, especially for you guys that have a 9 to 5. I'm doing this segment, guys, because on big days where the markets sell off, I have to do my homework. So I might as well do my homework with you guys so that you know exactly how a real trader investor approaches the market. I sit back and I golf and I golf and I golf until I look up one day and I say, ooh, the market's down 1,000 points. Now it's time to buy. But when am I going to buy? Am I going to buy it just because it sold off today? Nah. I'm going to wait and see if we start going back a little bit higher, or if we hit this mark right here. Now, that's the 200-day moving average. So every single stock that I pull up, I'm explaining to you guys what I'm doing now so that when I start doing it, you don't get lost. The very first thing I look for is this main one. We only hit this once a year. The 50-day moving average, we hit the 50-day moving average about 5 times a year. If you notice, we hit it here, 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 and here, and here, and here, and here, and here. I know a lot of you guys that ain't making money buying options and stock, and I'm like, you obviously don't use the 50-day moving average, you don't use the 200-day moving average. Because if you used it, you would have known to buy it at all of these different points. Now, I know a lot of you guys are mad right now. You done took a $15,000 or $20,000 class, and here Joel is sitting here making it so simple that a fifth grader could understand it. And this is actually what I teach the fifth graders, right? So when do you buy the market? You buy the market if you want to be what we call a counter trender. When the market's going down and you're trying to catch a bottom, this is how you catch the bottom. You catch the bottom by knowing these 3 moving averages, 20, 50, 200. 200 has the most strength, but it only hits it once a year. The 50-day has the next best strength, but it only hits it 5 times a year, because if you notice, it hit it here, June the 20th. Then we went up, we came back, we hit the 50-day again. We went up, we came back, we hit the 50-day again. You see how we never got to the 200-day. We went up again. We hit the 50-day perfectly. Then we went higher. Then we hit the 50-day again. And then we went higher. Then we hit the 50-day again. And for you guys that don't know what I'm talking about, this red line is the 50-day. That was a buying opportunity. That was a buying opportunity. That's a buying opportunity. That's a buying opportunity. Here's a buying opportunity. Here's a buying opportunity. Y'all see how it's hitting it perfectly? You know why it's hitting it perfectly? Because guys like me that really trade the market, we're the ones that move the market, not thousandaires or Reddit. I mean, Reddit can move one stock, but we're talking about the 500 largest companies on the planet, all right, that are moved by hedge funds and pension funds, okay? Look at all these times you could have bought. You could have bought an option contract there. You would have been making money 20 days later. Bought it here 20 days later. Here, 3, 4, 5 days later. All of these different times you could have won in the last year. This is January of 2020. If you literally had just pulled out the S&P and said, you know what? It's January the 1st. I'm going to buy this every single time it hits the 50-day moving average. You would have won once, twice, 3 times, 4 times, 5, 6, 7, 8. You would have won 9 times in a row, and we don't even know if you're going to actually lose on this trade. 9 times in 12 months, you would have made money. And how did you not make money in this market? Who's teaching you? I'm showing y'all the most basics of the basics of the basics of the basics of investing. So if you don't understand the basics, a lot of you guys need to quit all that advanced crap that y'all are learning and start learning the absolute basics. So for you guys that just gotta trade at least once a month, let's go all the way back to January again. We go all the way back to January, and instead of using the 50-day, this happens what? Once a year. This happens about 5 to 6 times a year, even though it happened 9. The 20-day moving average happens once a month. So out of the 30 days, you just gotta set alerts for yourself. Wait until we hit this 20-day and watch this. How many times would you have won and how many times you would have lost? Let's check. And I'm doing this, waiting for more people to log on, and then I'm going to show y'all about 50 stocks doing the same exact thing. January. This is January. All right, you would have won right there. You would have won right here, even though you would have had to wait about 5 days before you made money. You could have bought the 20 right there, and I'll make it a little bit bigger so that you guys can see. The 20 is this green line. You would have made money here, you would have made money there, you would have made money here, you would have made money there, but you would have struggled a little bit. Maybe we'll call that a loss. So we'll say 1, 2, then it lost. Then it hit it. You won about 6 to 7 days later. Y'all see that right there? This is your loss. Then it hit the 20 again right here. You were up. Let's say you bought options contracts. You were up 3 days later. Then it dropped. But it was back in business. This is what, May the 4th? You were back in business by May the 21st. So that was about a 3-week hold, okay? We'll call that maybe a loss too. 2 wins, 2 losses. Then you would have won here. You would have won here. That's 2 wins. You would have won here. That's 3 wins. There's a 4th win. Here's a 5th win. I don't know how y'all losing money in the market. So then it ran you off 5. It won 2. Lost 2, ran off 5, and then we'll count this as a loss. You're still winning 60 to 70% of the time. I just showed y'all a strategy where if you bought the 200-day, you won more than 50% of the time. You bought the 50-day, you won 100% of the time. And on the 20-day moving average, we'll just say you won about 60% of the time. Every single trade, you're winning 60% of the time, all right? So you want to take this same strategy when you're using your stocks. But you want to make sure that when you're buying these stocks, this 200-day has to be angled up. If it's angled down, it does not work. Y'all heard what I just said? That's what you need to write down. If this 200-day moving average is not angled up, and this is how you determine if a stock is bullish or not, then you don't trade that particular stock. All right? Now, let's go through these stocks. Let's go to Apple. All right? Apple, rising 200-day. What does that tell you? That means it's a bullish stock. Did I have to go and look at 5 or 6 other charts to see that? No. You see a blue line going up. You see the stock going from left to right. I figured that out in 5 seconds. Now, how do I analyze this quickly? First of all, we got to see if it's exhibiting a pattern. Here's the 200-day. It hit the 200-day back in March 2020. It hit it once, twice, 3, 4 times. It hit it 4 times since March the 20th. That's about right. Stocks are going to hit their 200-day moving average twice, 2 times a year on average. Okay? So, where do we think Apple is coming down to? What does it look like it want to come down to? It hit the 50-day, it didn't work. So, when you break the 20 and you break the 50, the next move is the 200-day. Joel sets his alert just like this. And he says if Apple gets close to the 200-day moving average, he might buy some. On to the next stock. Now, stocks also have betas. This is something that a lot of you guys have not learned in your classes either, which is killing me. I teach y'all's kids beta the first 2 hours of training. Some of you guys have been trading for 2 years and don't know what beta is. Beta is going to tell you how volatile that company is. All right. A company with a beta close to 1.0, I already know it drops about 20% a year. Why? Because beta, the volatility index, averages about 15 to 20. I know that's about 2 times the beta. That means anything around 1.0 is going to give you about a 20% move every year to the downside. So to check yourself to see where this 200-day moving average is, you go to the highs. Watch what I do. And you can do this on Thinkorswim. You're going to, man, what just happened? Oh, you're going to go to the highs. You're going to go to the 200-day moving average, which is here, and you're going to say, how? Oh, hold up. Let me use the pointer. I'm going to use my pointer. No, I'm going to use a trend line. And I'm going to go from here to here, and it's going to tell me right there. Y'all see this box? It's going to tell me what percentage that is to the downside. What does that say? 23%. I know that Apple is going to double this beta. This is 1.1, so that's really like 11. 11 times 2 is 22. That means Apple is probably going to drop about 22%, 23% on average a year. Well, guess what the perfect move is? 23%. I know I make this look like magic, guys, because I promise y'all, maybe I am smart, but there's something that I understand about the market that just the average person just don't know. And I'm trying to give y'all guys these gems for free because when things start to line up, it makes sense. Everybody knows that Apple, Microsoft, Amazon, Google, Facebook, they all drop 20% a year. How did you not know this? A lot of you guys are like, for real? It drops 20? I didn't know that. If a stock has a beta of 2.0, it's going to drop 40% sometime during the year. You're like, word, Joel? I'm like, yeah, how did you not know this? So when you hear me talk the way that I talk, it's because I don't understand why cats don't understand this, especially since I'm giving out this information for free. For free! Every single week. For the last, what, 3 or 4 years? Well, I've been doing it for what? The room's been open for 10 years. But a lot of you guys caught on to the room during the pandemic. All right, so, so I'm teaching you, all right? So we got to get through these stocks fast. So Apple's probably going to come down to there. Let's look at Airbnb. Airbnb, first thing I need to notice, does it have a rising 200-day? Now, here's what's interesting. Why doesn't it have a blue line, Joel? It doesn't have a blue line because Airbnb just IPO'd, so it doesn't have enough information to give you a 200-day moving average. So you're going to have to use the 50-day. Is it above the 50-day? Yes, it is. So I'm going to have to visually draw some support areas. This is the lowest price Airbnb has ever been, ever. And this is another price. So we're so right around 129. It looks like you got some support right around this price here. As you can see, Joel already has an alert set just in case Airbnb drops and I want to buy it as an investment. For you guys that are using the RSI or the MACD, you also want it to start going blue on the relative strength index, making you know that it's oversold. Well, we're not oversold yet. All right, it just starts selling off. So the first place I'm going to buy it. Now, why is Airbnb doing well? Because Airbnb is Airbnb, right? So some people are buying it at the 20-day. I like buying it at the 50-day and the 200-day. I don't really care too much about the 20-day. I like the 50 and the 200. That's what I teach. But for those that wanted to take a shot today, you can. But that's not enough for me. I know that Airbnb has this beta it says zero point 0.6, which tells you that it should only drop about 10 or 15%. But I like to buy these stocks 20% off, right? So 12% is going to take you to the 50-day, I'm sorry. Yeah, 12% is going to take you to the 50-day moving average. To the support area is going to give you about 23%. That's what I love. I know stocks that are good, that everybody's buying, that has some decent beta is going to drop 20%, right? As an investment. As a trade, maybe I'll get in on those, 12% or 10% drops. But me personally, I'm trying to wait until it at least gets to this 50-day moving average. So I go here, I set my alert, I put at or below. You can find all this on the Thinkorswim platform. Let's look at AMC. Now I'm only looking at AMC because y'all trade AMC. If I already made all my money out of AMC. Does AMC have a rise in 200-day? Yes. That means it's a bullish stock. I don't have to look at any other charts. So what areas are AMC going to drop to? I don't know what's going on with my charts. What is going on here? Oh. All right, we're at the 50-day. But what don't I like? I don't like any moving average that's angled down. This is angled down. I don't like it. I want this to be angled up. Okay? Before I start to buy it. But you have the 200-day that's angling up. AMC has a 1.9. So this is what I want you guys to start doing. When you see this number, you multiply that times 10, then you multiply it times 2. I'll show you guys in a minute why you multiply it times 2. Anybody that's taken my courses automatically know why. Because the beta is right around 20-something, around 30-something right now. So stocks are moving twice what their normal beta is. A stock that normally moves 12% is going to move 24%. A stock that normally moves about 20% is going to move 40%. Y'all should know this. That's the basics of the basics of the basics of the basics of investing and trading. All right, so if I know that this can move 40%, well, if it can move 40%, then I need to go to the highs and I need to say, where is 40%? Where is 40%? 40% is right around here. Right around this price is 40%. That's where it's probably going. How did you know that, Joel? Because stocks that got a 2.0 beta under regular conditions is going to drop 20. Under a little bit of volatility, it's going to double that. 40%. 40% is going to put you at a support area right around here. I don't want you guys to buy it just because it hits there, because you know what's close by? The 200-day. You might as well just wait until it gets to the 200-day. When it gets to the 200-day moving average, if it gets down there, that's about a 47% drop. Wait. And if you miss it, who cares? It's going to drop. It's going to go up, go down, and start to go back up. That's the what would Joe do method, get back in. Okay, but it's going through the 20-day and it's sitting on the 50-day, but it looks like it wants to go lower. The MACD is crossing and the RSI is crossing, and we're not oversold yet. It's got more room to move to the bottom. Let's look at AMD. This is a semiconductor company. All right, rising 200-day. I'm going to make a lot of you mad. Why? Because you're going to see all the different areas you could have bought AMD. Oh my God, Joel, it hit the 200-day perfectly. It hit the 50-day like 15 times in a row. I know. Why didn't you know? I'm sorry, your teacher didn't teach you this. They suck. A lot of teachers out there are terrible, terrible. All right? But it doesn't mean that you can't make better decisions now. Hit the 200-day here in rows. Now, what's going on right now? 200-day is angled up. That means you can buy it. It's a bullish stock. How much is this thing going to drop? AMD has a 1.9 beta. Guys, it's going to drop 35 to 40%. But Joel, I read the white papers, and it got $20 billion on their balance sheet. It's going to drop 35 to 40%. Sorry. Joel, how do you know this? Because I've been doing this for a decade. It's going to drop 40%. You know how I know that? I didn't even have to look at this. I didn't even have to look at this. Watch this. Watch this. The highs to the lows is about what, guys? What does that say? About what? 20? That's 28. All right, so I might be wrong. It might drop 28%, which is fine. But I'm not buying it until it hits this 200-day, okay? 40% will put you right around here. 40% puts you right back down here. It can do that, guys, and still be bullish. I'm betting that it's going there. That's what I'm betting on. And boy, oh boy, if it can get down to there, the true traders, the 1%ers like me, they say this matches this. This means it's a bullish stock. I should buy it. On to the next one. Y'all be reading stuff for like 5, 6, 7 hours at night. Joel don't. Especially if it gets down to here and this starts to go blue. Y'all see last time this went blue? It started to go up. It took a while for it to do it. But there's a semiconductor shortage. All right, let's get to Amazon. All right, so I'm going to try to do these in 30 seconds now because we're still in A. I got a lot of stocks to look at. All right, so let's look at Amazon. How do you know where to buy Amazon? First of all, what is the beta of Amazon? It's 1.0. What does that tell you? It's going to drop 20% every year because Joel said it. Next time somebody say, why is it going to do it? Because Joel said it. Joel Z said it. Like Yeezy. Some of y'all got that. Anyway, it's going to drop 20%. Why? Because we got double the beta. Let's look at the VIX right now. All right, the VIX. I'm going to quickly explain to you guys what the VIX is and why this is your best friend. The VIX, we're going to look at it on a quarter chart. All right, the VIX is the fear index. I just put out a post about the fear index. If you don't know what the volatility index is, you're learning something today that's going to change your life. And I didn't charge you $50,000 for it. The volatility index is the fear index. It's how we know where the bottoms are. Joel, how do you know when there's a bottom? The volatility index. Not because your friend said it. Not because everybody on TV told you to buy it. It's because there's maximum fear. If you go back in history, and I always want you guys to do your due diligence and go back 10, 15, 20 years and look at charts because I don't want you to just do it because Joel said it. Joel teaches you how to do it on your own so that you won't be giving Cousin Sam your stocks for him to invest because he done took a class last week and said he can manage your funds. He can do it, but you should be able to look over him and micromanage him. The volatility index only hits above 50. This is a chart going back to 2009. We have only been as fearful as 50. 1, 2, 3, 4, 5, 6, 7, 8, 9 times in 12 years. That means when the volatility index gets above 50, guys, it is a buying opportunity. I don't care what anybody says. It's rare. It happens less than the stock hitting its 200-day moving average. So, where do we spend most of our time? We spend most of our time at 16. So there's 3 numbers, 16, 32, 48. I'm going to give y'all these numbers again. 16. Now remember, I'm going to have this video out. Y'all can watch this video forever. I don't care. All right. It'll be in the Insider Trading Room. I'll post it on my YouTube page too. It's going to hit 16, 32, 48. 16, 32, 48. 16 is where we spend most of our time at all-time highs. 32 is kind of where traders love to trade. 50 is where all investors invest heavily. Heavily they buy options. This is where you get rich. But y'all missed the last time it hit 50. It hit 50 2020 March lows. Joel went all in because Joel looked back and said, when was the last time we was at 80? Oh, it was 2008. Hold up, it's been 13 years since we hit 80? Oh, hell yeah, I'm investing in the market. There's no way this is sustainable. And it wasn't. And that's why we hit all-time highs. That's why I made a killing. Okay? And it happens infrequently. So what is happening right now? We're approaching 32. 16 is 1 time this beta. 32 is 2 times this move. Anything higher than 48, the volatility or this beta triples. That's right. A stock like Apple that normally moves 11% will move 33% or 40%. Okay? You can understand that by looking at the VIX. The VIX you can pull up on any chart. You can go to Yahoo Finance. Shoot, I think you can pull up the VIX on Robinhood. Just pull it up, see what the numbers are. If the numbers are higher than 16, you're going to experience waves or volatility in the market. If it ever gets above 50, stop trading, find whatever money you can under your sheet or under your bed and invest it in great companies, because you're going to make money 100% of the time if you just hold out for 4 months. Y'all hear what I just said? 100% of the time. I just gave y'all a gem you can use for the rest of your life. Some of y'all don't even realize what I just gave you. So, the volatility today hit 28. How high can we go? We can get to about 32. Y'all see all these alerts I got? These alerts are telling Joel when to put his money in the market. I'm still holding out for 30. I think we might hit about 40 though. If we don't, sorry, this might be it. Why? Because this is what the market's been doing trending wise. Okay? There's a trend line here. We keep hitting this fear, and then every time the fear is a little bit less. So if we get higher than this, guys, it's going to spook people like me, and we're going to say, oh, shoot, are we about to experience a 50 or maybe even a 90? Because if we do, I'm going to make the same type of gains I did in March. Why, guys? Because the market ain't going away. The market represents the rich. It doesn't represent you and I. People were dying. People were losing jobs. The market didn't care. It went to all-time highs. I've been telling y'all this for a decade. All right, so let's get back to the stocks. So now that y'all understand the volatility index. So we looked at, let's look at Amazon. So I know you guys are like, how is he clicking over here and it's popping up over there? You got to take my courses. All right, let's pull up the 200-day moving average and let's do this again. So what are we doing right now? We are hitting the 200-day. There's a reason why we bounced perfectly off the 200-day today, guys. Y'all see that right there? You could have bought the 200-day earlier today at 33.02. You could have made a quick $50 off of Amazon. Now, it doesn't mean that this is it and it's going to keep going up, but it's always the first area is going to bounce. A support area is where it hits, it bounces, it might not bounce that high and it might come back. But it usually bounces at all of these support areas, and that's exactly what Amazon did today. But I got to do a test. How low do I think Amazon can go? Because it really does look like a buying opportunity. Well, Amazon has a 1.0 beta. Joel says that the VIX is twice this amount. That's 20%. Is Amazon 20% off from its highs? Let's check. It says here, where's the values? Let's do that again. Amazon is, I gotta bring it lower. Amazon, if it hits the 200-day, is about 12% off. I think it can go even lower. If it gets down to about here, we'll be off about 16%. That's where I think we're going, because remember, I'm a real true investor and I'm stingy. I love buying the best values of companies. And if I even say I ain't gonna buy it there, I'm pretty sure mutual funds and pension funds said, I think it can go lower. I also don't see it being oversold. The last time it went oversold was right here when it hit the 200-day. Y'all see that? It hit the 200-day. It went oversold. It was a bounce area. It was one of the easiest moves you could have made in options. Easiest. I made a killing. Okay? All right, let's get to BABA. All right, so now we're in the B's. All right, so BABA. What I don't like about this, if you sell all of BABA, I don't mind. Why? Because the 200-day is angled down now. That's a sign to either get out or sit on your hands for a while. Why? Because a 200-day moving average angled down is not good unless we start getting oversold. We're oversold right now, but this is a Chinese stock. And as you can see, not only are they talking about Chinese stocks getting delisted, and for those that don't know about Alibaba, Alibaba is the Amazon of China. And if you don't know what's going on with Chinese stocks today, I believe this company called Ever something, I don't want to say Everclear, that's a liquor, but Ever something is they may default on their loans, and there's a lot of crypto that's invested in it. That's why cryptocurrency is selling off, and it's involved in real estate. And you have American investors that are invested in the Chinese market. So we're pulling our money. The Chinese are pulling their money. So it's all bad over in China right now. And as you can see, we're already, what percent down are we? I don't know why it's not working the way it's supposed to. We're already down 53%. That's crazy. So it's already down more than it normally wants to be down. So if you want to take a shot at this as an investment, be my guest, but it's looking kind of bad right now. Let's look at Blink Charging. Blink Charging is an electric car company. Electric car provider. So they provide the charging stations. So I love investing in companies that's involved with the infrastructure, because the infrastructure bill has money that's going to be allocated to charging stations, because electric cars are the future. They said in about 6 or 7 years, 1/3 of the vehicles being sold, I think in the world, will be an electric car. It's not going to totally take out the gas powered car, but 1/3 is a large chunk. So we got to start building the infrastructure in place for people that have electric cars like myself. We own 2. I've owned 5 in my lifetime, and I'm not even that old. All right, but the 200-day moving average is angled up. It's got a very high beta. So guys, how do you calculate it? How you calculate it again? 2.4, double that, 48%. This stock can drop 48% easily. Well, from here to here is about, dang, it's not working. From here to here is about 54%. So it's already down to 48% that I think that it can go down. It hit the 200-day moving average. We haven't gotten oversold yet. You want to see that go blue, and you want this to stay upwards. So, I would start taking some shots at this particular company. All right, Beyond Meat, one of my losers. All right, so Beyond Meat is involved in fake meat. So if you're in the fake meat revolution, if you're a vegan and you're into companies that go with your lifestyle, you have a lot of people that are buying Beyond Meat, because they're the leaders in what they do. They have a very high beta. So you have to expect a company like this to drop 40% if the beta starts to go up. Well, 40% of 240, what? 20% would be what? 46? So about $90 off, about $100 off. We'll take this around 139. So it's already down significantly, right? It's already down. Stock is already down 58%. Okay, over half of that 239. So that was expected. Any stock that's got a beta of 2.0, guys, it's gonna drop 40% minimum. I don't know why you guys don't know this. So when it happens, you can buy it on sale if the 200-day moving average is angled up. But now the 200-day moving average is angled down, so be careful. What I do like about it, though, is you got a support area down here, so you're closer to the bottom, I believe you are, than the top. Even if you bought it here and it goes back to its highs, because stocks have a 90% chance of going back to their all-time highs, you're going to make a 100% return. Okay? So the 20-day, the 50-day, and the 200-day are angled down. That's not good. So if I was a betting man, I believe that we're going to go here, maybe even lower. You want it to go blue over here before you buy it. All right, good old Canopy Growth. All right, Canopy Growth. It was the largest cannabis company on the planet. Now, Curaleaf is the largest cannabis company on the planet, and it's an American company. So, a lot of people pulled their money from Canopy Growth. They put it into Curaleaf. Why? Because Curaleaf is an American company, and the American market is way bigger than the Canadian market. Now, what I love about Canopy Growth is they have an investment, or they bought out one of the largest cannabis companies at the time, called Acreage, I believe the name of it is. So they have ties to the American economy, and they have the Canadian market. And they have Constellation Brands as a rich uncle that can save them in case they start losing money. So Canopy Growth could get down to this $9 range. We're at 13 right now. $9 ain't that far. If we get down there, guys, it's the lowest that it's ever been. I think that that's where it bottoms, and I'm going to tell you why. Not because I believe it can drop to here. The reason why I believe it can get to 9 and hold, because Canopy Growth got a $4 billion injection of cash from Constellation Brands. So if you get $4 billion from your rich uncle, then your value should at least be $4 billion, period, because that's how much money you received. So I don't really believe that this company can stay at the 3 or 4 billion. I really believe that it's at its bottom or close to it. Now check this out. 13 to 9 is a $4 loss. So I think there's about only 30% left to the downside of Canopy Growth. So if you're thinking about buying a reputable cannabis company, guys, it's the second largest cannabis company on the planet. So it's still, and it's attached to Constellation Brands, which owns the Corona Beer brand and the Modelo brand. So they have a rich uncle that they have access to. So if you're going to buy something, buy both of them. And since we're talking about Curaleaf, let's look at its chart. Curaleaf, the largest cannabis company on the planet. It broke through the 200-day. Now the 50-day is angled down, but the 200-day is still angled up. You could have bought it here when it hit the 200-day, and you would have made a killing. $6 all the way to 18. That's triple your money. $100,000 was worth $300,000 September to February, October, November, December, January. In 5 months, $100,000 was worth $300,000. You could have made $200,000 off of a $100,000 investment. Or for those that only have about $10,000, it would have been worth $30,000. You got Bitcoin type moves in some of these cannabis companies. Now it's starting to sell off. Let's look at the beta. The beta is 1.7. What is that telling y'all? That means it's going to sell off at least 17% every year. But because the beta has increased, it's going to drop 40%, period, which is really 34%. So has it dropped more than 34%? If it has, then it's on sale. It's dropped 45%. It's on sale. Can it go lower? Of course it can go lower, but guys, it's the largest. If you believe in the cannabis space, why not buy the leader? If you believe in retail, you go and you buy Nike. If you believe in e-commerce, you go and you buy the best, which is Amazon. If you believe in phones, you go and you buy the best, which is Apple. So if you believe in it, you gotta buy the best. And I own this one and Canopy Growth. All right, let's go back to ChargePoint. All right, ChargePoint. Sitting at ChargePoint is also a company that's involved with electric charging stations. All right, I have a ChargePoint electric charger in my garage right now that I purchased. We're sitting at support. All right, it could drop to 12. Do I think it can do it? Anything can happen in this market. What I'm looking for though is this is when I pull out the RSI. You want to make sure that it's over. When it's oversold and it hits the 200-day, y'all see how this is oversold and it hit the 200-day, what it did? Oversold, and then it hit the 200-day, and then it went up. You kind of want to see it oversold. That's why the market is so scary right now, because every single stock we looked at, ain't nothing oversold yet, guys. Nothing is oversold. That's scary. That means we can go lower. Every single one of these stocks ain't oversold yet. The RSI stands for the Relative Strength Index. The Relative Strength Index. That means it's the strength of the market to the upside and the strength to the market to the downside. When the Relative Strength Index went off here and we were hitting these highs, y'all should have known to get out of AMC. Y'all should have known. Nothing is oversold yet. That means we got some movement to the downside, guys, and I don't want to scare you. Amazon is the only one that actually hit its oversold area previous to this sell-off. So this is one that I'm actually looking at going heavily in. Baba, nope, staying away from Asian companies. I'm not Asian companies, sorry, that was racist. Chinese companies. Let's look at Beyond Meat. It's not oversold yet. Canopy Growth. I believe, is oversold. This is oversold. You want to take a shot at it? That's why I said it's almost near the end, in my opinion. CMG, Chipotle. All right, Chipotle. Some of y'all call it shitpotle. I love Chipotle. It don't mess up my stomach. But it's got a lot of room to the downside. I mean, it's at its, I mean, was it, it only dropped 1% today? One? The market sold off huge and this stock is still up almost near its all-time highs. That's telling you something. This company is bullish. This company probably wants to go to $100 billion in market cap. So when you see things like this, when you see a tape that's really bad and nobody wants to sell their CMG, you need to watch it. But can it get to this 50-day? Yeah. Can it get down to this 200-day? It's going to take a while, but it could. Okay. Still a bullish company, but it went through the 20-day. Now it's approaching the 50-day. Let's look at Coinbase. Y'all love this one. Coinbase doesn't have a 200-day moving average. Coinbase is the most secure cryptocurrency brokerage that's out there. All right, it's American made. It's based out of San Francisco, and this is where a lot of people store. Like, let's say you got a lot of Bitcoin, $10,000, $20,000, $30,000 worth of it. I always tell people to store your crypto in a vault. Coinbase is one of the few brokerages that are out there that when you buy it, you can store it in a vault on their platform, so you don't have to worry about the horror stories about your cryptocurrency getting stolen. All right, and you can buy Bitcoin, Ethereum, Cardano. You can buy all of that. You can buy Solana. You can buy Chainlink. You can buy all of that on the Coinbase platform. I know that there's other brokerages out there that offers these ridiculous, dividends or percent, or staking it, which is kind of like a dividend. You get paid by having your money invested in it. And Coinbase is slowly trying to get into that part of it. But a lot of people are investing in the brokerage because the brokerage is only it's only worth about $50 billion. And they compare this to like a PayPal or a Square. Well, guys, Square is 100 billion. PayPal is 300 billion in size. 300 billion? Square is 100 billion. Coinbase is only 50. That means it's got growth potential. Okay? It's not going to really have a high beta because it's been going sideways. So you want to watch it. But we hit the 50-day. And it's holding the support area. So if you want to, actually, it's not holding. Yeah, it's holding the support area. We hit the trend line today. There's a reason why we hit this today. Okay? Because now the market has to decide, are we going to go lower? And if we go lower, it's probably going to come down to here, where Joel will probably buy more, because I love companies like this as a 5 to 10 year play, because I automatically know that it can get to 100 billion. That's 100% return. And it can do that in a year or two. That's going to outperform the S&P 500 and the NASDAQ. Let's look at Costco. Everybody uses Costco, but nobody wants to be invested in it. Now, y'all need to thank Noble for this one, because Costco was not on my radar, and I bought it just because he told me to buy it. And I think I bought it somewhere around this July area when it hit the 50-day, and I'm up a decent amount of money. I think I'm up 20%. I think I bought it at $384. 20% is $76? Yeah, I bought it right around this 50-day moving average. Well, we broke through the 20. Now we're approaching the 50. Okay? What is its beta? Its beta is not going to be as high as everything else because Costco is one of those low beta companies. So a 10 or 15% drop is doable for this company because it's got a low beta. So has it dropped 10 or 15%? Well, I don't know why that's not working. It's dropped 5%. Joel, how come my Costco only dropped 5% and Apple dropped 15%? Because Apple has a higher beta than Costco. Its beta is literally double. Apple's volatility is double what Costco is. So when Costco is down 6%, Apple's going to be down 12%. If Costco's down 10%, Apple's going to be down 20%. All right, you guys got to understand the fundamentals of the market so y'all know where to buy them. If Costco gets down to this 20%, this 200-day moving average, it would have dropped 17%. And believe me, guys, with a low beta like this, that you got to go all in on Costco. when it reaches that value, if it can get to this 200-day. I don't think Costco gets down there. I think Costco gets to its 50-day, sits there for a while, and waits and sees what the market is doing. The only way it's going to go down here is if the market sells off about 20%. Let's look at Salesforce. Salesforce is the #1 cloud computing company on the planet. So if you believe in storage of information on the cloud, this is the company that you go for. Why do people use Salesforce? Because everybody can't be an Apple or an Amazon or a Google that stores all of their information. You might be just a regular company like a bank, and you need to store your information with somewhere. You need to store your information somewhere. Well, a bank would approach Salesforce and says, hey, we need your services so that we can store all of this information with people's banking records on the cloud. Okay? So they get these Fortune 500 companies to invest in their company, right, for their services. And they're #1, okay? So they're a $250 billion company with a decent little beta. Well, the 200-day moving average is angled up. It's going a little flat. It looks like we want to hit the 50-day. Maybe it goes down to the 200-day. If it gets to the 200-day, Joel's going to go all in on it. He's going to try to find some money to buy it because these are companies that just don't go away. Think about it. A cloud computing company makes more money if y'all are sitting at home. It's no environment that they don't make money in. You stay at home, they make even more money. You go out to work, you're still going to work. You still got to store that information. All right, so that's one of my #1 companies. CrowdStrike is another company that I love. Why? Because CrowdStrike is the #1 company. That and Palo Alto, I think I said that right. Those are your cyber. Dang, I don't know why my brain's going. Basically, they do cybersecurity. Okay, so cybersecurity is protecting, your devices, protecting these Fortune 500 companies. They're #1. So just like the same company that went to Salesforce and said, hey, can I use you to store information? They're going to go to CrowdStrike and say, hey, can you protect this information that's being stored on, with Salesforce? So, this company is going to do well. And they got a lot of Fortune 500 companies that are using their services, but they're only a $50 billion company. That means they have room to grow. You got companies, guys, that's worth 200 billion, 300 billion, 1 trillion. This company is only 50 billion. Okay? And cybersecurity is becoming a #1 thing. So, beta, not that high. So when the beta is not that high, you have to assume that you're probably only going to get about a 10% or a 20% drop. So what's the drop to this 200-day moving average? Well, let's check. If this stock drops down to this 200-day moving average, that's about a 20% drop. All right, it's not going to really drop no lower than that because it's got a lower beta. Can it drop lower than that, guys? Yes, but we're just talking about averages. All right, we looked at Cureleaf. Let's look at Dash. All right, DoorDash is doing well. But DoorDash was only down 1% also. Very bullish company, but it's overbought. It's going to come in some. What's the first area it's going to come into? It's going to come into this 20-day, then this 50-day. How low is that? Well, let's look at the beta. 1.3, this stock can drop 20% easily, all right, from its highs. Well, what were its highs? Joel ain't buying this stock unless it drops 20%. This is 256. What's 20% off of 256? About $50 off? Yeah, 10% would be $25. $50 would be 20%. That means I want to buy this stock right around the $200 range. Well, $200 is right down here, guys, at the 20-day moving average. That's where Joel's going to buy it. I'm buying that just off of his beta that y'all ain't learned yet. 20-day, 50-day. Okay? Let's look at Disney. Good old Disney. 1.1 beta. That means Disney sells off 20% every single solitary year. At least 11% under boring conditions, but we haven't been experiencing boring conditions. We've been experiencing more than unusual volatility. At least double what you see here. So that means Disney's probably going to drop about 20%. 20% is going to put you right around Where, guys? The 200-day moving average. Here's 20% right there, 158. That's why there's an alert there. Okay? Do we get down there? I think we do. Disney always goes back to where it's supposed to. Okay? 20% ain't that far, right? 20% is right here at 160. We at 178. It can drop another $18. It's already down. It's already down 12%. It can't drop another 8%. Yeah, that's doable. I think Disney gets down to this 160 range. I think we go through the 200-day. We might get to this. Let me erase this so that you guys can see it. Here's some support right here. I think we at least get down to here. And then you want to see it go oversold. We're not there yet. It's pointing to it. Last time it went oversold, look at what it did. It never even hit the 200-day. It went oversold, and then it started to go up in value. Okay? I think the same thing happened. I think we see this oversold. I think we get down to 167. Ethereum is a cryptocurrency. Okay? It's the second largest on the planet. All right? You can buy it in stock form if you buy it through your trust. A lot of people that have IRAs, this is how they're getting involved in crypto instead of going to Coinbase. They just buy Ethereum. Why? Because Grayscale, their thing is that they actually invest in the cryptocurrency. So it's not gonna go up. You know, it's not gonna be 1-to-1 as it goes up or goes down. But you know, if you get a nice little move to the upside, it's gonna move up. And if it goes down, you're probably gonna see comparable downward movements. But it looks like we're just coming down here to the 50-day moving average, probably coming down to this 200-day. The last time we hit the 200-day, look at what happened. You had 3 days to buy it. You had 3 days to buy Ethereum. And a lot of you guys are like, how do I know how to buy Ethereum cryptocurrency? Well, pull up the stock and pull up the information on it because they're going to run kind of close to each other. It was oversold right here. Overbought right here. And we're not even oversold yet. There's room to the bottom. Let's look at Ford. All right, let's look at Ford. Ford looks like it wants to hit the 200-day. We're right there. Ford has a 1.2% beta. That means it's going to drop 24%. Well, have we dropped 24% yet? And it's 24% from its highs. 16 was its highs. I don't even think that was the highs. But we're down. Guess what, guys? 24%. Perfectly. I think Ford's a buy. But Joe's going to wait until we see how the market is doing, and I kind of want to see it oversold. I want there to be super panic before I start buying it. And then Joe's going to wait for it to hit it, go up, down, start to go back up again like it did right here. I like it to break through the 200-day. Let me erase all this. I like for it to break through. All right, I like for it to break through. I like for it to go up, down, Joel starts to get in. If you missed that one, up, down, Joel starts to get in. Or it breaks above the 200-day to 50-day. All right, dang, I missed all these moves. I'll get back in when it hits the 20-day. All right, and it starts to go back up. All right, cool. So that's Ford, and it looks like Ford is at its, all it's doing is it hit its 50-day moving average, guys, and it did the reverse. The 50-day was angled down, so everybody knew to get out there. Looks like it wants to come down to this 200-day where Joel will probably buy more. I'm already up 100%. Actually, not 100% anymore. I bought around the $7 range, so now I'm only up about 50% on that trade. GBTC is Bitcoin. Okay? Hold on for a second. Somebody's at my door. Hold on. All right, I'm lying. Nobody was at my door. That was a big old roach that I just killed. All right, let me keeping it real. The crazy thing about it is that it flew at me. Like I ain't seen no flying roach in a minute. And that joint flew at me while I'm doing this webinar. Anyway, so GBTC is Bitcoin. All right. So Bitcoin is kind of like, Bitcoin Trust is just like the Ethereum Trust. Okay. Bitcoin Trust is like the Ethereum Trust. So they're actually buying Bitcoin, right? So if you don't want to go to Coinbase and buy Bitcoin and you have an IRA and you want some exposure to it, and I always tell people 1% of your account. You shouldn't be putting 10% of your account. If you got a $300,000 account, you know, some people are gonna spend 10,000 and buy a full Bitcoin. I'll say buy 1% or buy an Ethereum for 3,000. That's all you need to have that exposure to the cryptocurrency space. And then you can do some on your own. But all we did is we hit the 50-day. Can we get down to this $24 range? Of course we can. And these are the types of vehicles that are going to sell first anyway. If the market starts to really sell off, people always sell off their speculative stocks first before they sell off their Apples, their Amazons, and their Googles. Let's look at General Motors. General Motors, 200-day moving average. I'm going to start going extremely fast now because it's 9:30. All right. So General Motors, 200-day moving averages angled up. So it's a bullish stock. We're underneath it, yes. But General Motors has a 1.3 beta. Are we down at least 26%? Yes, it's 26% perfectly. Y'all see that? 26% perfectly. All right. 1.3 times 2, 26. 26. It's a good time to buy it. Okay. I want to see it get oversold. It actually went oversold right around here. And then we didn't know that this part of the market was about to happen. So can it sell off some more? Yeah, it can get down to about 46. I think the lowest General Motors gets though is 40. Now, I'm sorry, I take that back. General Motors actually has negative news. Remember, the Chevy Bolt is like blowing up everywhere. They say if you're a Chevy Bolt owner of the electric vehicle, you need to stay within 50 feet of the vehicle. But the Chevy Bolt is such a small percentage of the sales that they make that it's really not really affecting the company, but it is having an effect on their electric car speculative investors. All right, let's look at Google. Google, every single time Google hit the 200-day, you could have made money. Could have made money here, here, and then it didn't touch its 200-day for over a year. But if you can't wait for it to touch the 200-day, which only happens once a year, and then the volatility index only goes above 50, every 18 months? So the VIX hitting over 50 is the rarest. The second rarest is when a stock hits its 200-day moving average. The third rarest is when it hits its 50-day moving average. Well, it's really the 100-day, but I'm not teaching you guys that. But it hit its 200-day here, and then that was September 2020, and then y'all ain't seen it hit the 200-day since. But if you missed it hit the 200-day, and y'all see how it hit the 200-day perfectly and started going up, you wait for it to get above the 50, and every time it hits the 50, you buy. I always tell people, why are you buying all of these companies nobody knows about when you could be making a killing on something like Google? Look, it won once, twice. It hit the 50 again. That's 3 times, 4 times, 5 times it won for you. 6 times it won for you. Almost touched it here. Google won every single time it hit the 50-day for you. At least 2 to 3 days out. But yet y'all ain't making money. And it's because you guys, if you're struggling as traders, I tell y'all this all the time. If you're a struggling trader, you start with the largest companies first. You don't start with the companies that Uncle Leroy gave you a stock tip on. Okay? You start with the Apples, the Microsofts, the Googles, the Facebooks. If you don't know how to find those companies, take my webinar. You can screenshot the picture that I give everybody, or Google what are the top 50 companies what are the 50 largest companies in market cap in the world. That's where you start. Okay? Let's look at Robinhood. Robinhood. Ugly. No 200-day, no 50-day. All you got is a 20-day that's angled down. You know what that means? Stay away. How low can it go? Robinhood can get down to this $33 range. I'm just going to set an alert just because. Now, y'all see how in an hour and a half, I'm educating y'all and talking, but we've looked at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. We've looked at 24 stocks. But yet some of y'all say, I don't have time to do this, Joel. I just don't have time. I got a 9 to 5. I got 7 kids. I got to cook dinner. I got to clean. I just don't have time. I just don't have time. Yes, you do. You got time. You got time to make money. All right, Innovative Properties. This is a real estate company. It's a cannabis company that's involved in real estate. It's the number one cannabis company involved in real estate, right? They're a REIT. Anytime you see something that says REIT, which is a real estate investment trust, all right, it means, or anytime you see trust in general, that means that that stock or that company or that asset is reinvesting into that product so you can feel comfortable. Like, let's say you wanted to buy gold. You don't have to go and buy gold in the bank. You can buy gold stock. You can buy the GLD, which is a trust. It's a ETF that buys gold, that buys physical gold. So you don't have to go out there and buy it. But they buy real estate, okay, for the cannabis companies. But if you notice, every time it got close to its 50-day, it was a buying opportunity. See that? Every time it got close to the 50, every single time. And even when it hit it here, you were down for 1, 2, 3, 4, 5, 6, 7, 8, 9. You were down for 11 days. Ooh hoo, boo hoo. And then it was back up again. Then it hit the 20 day, 20 day, 20 day, hit the 50 day. But remember, the 200 day is that magical number. Do we get close to it? It got close to it right there on May the 19th. And now we're right here. Okay? Where do I think we go to? 196. Joel is about to set an alert. If we get down there, if the market sells off like I think it is, we get to the 200-day moving average. Very good company to buy. Y'all see that 200-day moving average angled up? Let's talk about Jumia. Boy, oh boy, we all got a love-hate relationship with Jumia. Jumia is one of those get-rich-quick stocks. Or get-rich, if you hold it for 5 or 10 years. Either or can happen. You can either make a whole bunch of money now, but I think at some point you're going to make a whole bunch of money on it. It's just my opinion. Well, we got oversold here. I thought that was going to be a real good buying opportunity. It's struggling, but it still has a rising 200-day moving average, despite the fact it dropped from 70 to 20. Now, this is the Amazon of Africa. It's an e-commerce company. E-commerce companies are the number one companies as far as making money, or growth potential, because with COVID and people being at home, all of these different products, everything is going, on the internet. Everybody's buying products on the internet. Shoot, you can even buy cars now. Like, people are not going to dealerships anymore. I bought my Tesla, guys, and never even saw it. Never test drove it. The day that I picked up the Tesla was the day that I drove it for the first time. Okay? And this is what's happening with like Carvana. They're delivering cars to you through the internet. Like, e-commerce is where it's at. So if it's the Amazon of Africa and it's only $1 billion company, that's why I'm like, guys, give the stock a chance. But it's going to drop 50% on you. Its beta is so high. It's going to make you, when it's going your way, it's going to make you a killing. When it's going down, you're going to be mad at it. It's very emotional. But it's emotional because it's only $1 billion in size. This stock can get to 10 billion, guys, easily. That's 5 times its value. It can get to 10 billion, and 10 billion ain't a lot of money in the e-commerce space. Not when you have companies like Shopify, which is the Amazon of Canada. That's 170. This company has the potential of making you 50 to 100 times your money. That's why I'm so into it, because I'm like, yo, I can throw $1,000 at this company, and one day that 1,000 might be worth, 100,000. You see what I'm saying? That's the kind of bets that you take. So don't throw all your money at it, but you can throw something at it, okay? But we're way underneath the 200-day. It definitely dropped more than 40%. It's dropped about 70%. Can it go lower? Yeah, but it looks like it's got some support around this 17 range. It hit 17 back in May, and it's been holding that value for June, July, August, September for 5 months. That's a good sign. If we break below here, I believe we only break below that for a couple of days. Get back up here, test it, and see what the market's going to do. The next time I see this go oversold, I'm buying more. All right, let's look at JP Morgan. This is a bank, one of the largest banks, if not the largest bank in the world. I don't know if it's the largest. Actually, I think it is. It's 450 billion in size. All we did, guys, is we're getting close to this 200-day. Its beta is 1.2. That means this stock can drop 20%. Have we dropped 20%? Let's check it out. We have dropped 10%. Okay? And that's about right. You know, it's a bank. Can it drop lower than that? Of course it can. It's a bank. That's 20%. Why did I pick this value? Because sometimes we overshoot. And that's the next support area right there. I think that's where we go to. Okay? In my opinion. Lucid just came out. It's now the number one. Look, Lucid was up today, people. When you see when a stock goes up when the market is up, and then the market goes down and that stock is still up, that means you got a good investment on your hand. Okay? Why are people buying it? Because this stock used to be a $64 stock that's $24 now. And guys, it's going to go into production. Why? Because the Tesla engineers that left Tesla created their own company. And just this week, they got an EPA rating where their car had the best numbers as far as mileage per charge. I think their vehicles can get 500 miles of charge. They have the world record now for that, for that accomplishment. So people are investing in the company. They need investing funding so that they can start making cars. I'm invested in this company. I think you should be too. Let's look at Live Nation. Live Nation is Ticketmaster. So Ticketmaster is going to do well when the economy opens back up. Well, the economy opened back up, and that's why Ticketmaster blasted in price. Okay? It's got pretty high beta. We hit the 50-day and the 200-day moving average. Where do I think we come down to? Right here, 81. Can we go lower? Yeah, but I mean, it's midway. It don't know what it wants to do. This is actually a good sign also. This stock wasn't even down today. It was like down 0.1. When you have the market down 1,000 points and you look up and this company is only down 0.1, take note. That's a stock you need to be buying. It is bullish. Now, can it go lower? Yeah. But I think if it gets to this 200-day moving average, that's where you go all in on options 6 to 12 months out. Let's look at Mara. All right, Marathon is involved with, is it? I thought this was a cryptocurrency company. Okay. Oh, yeah, it's not Marathon Oil. All right, yeah, this is a crypto play. Okay. Hit the 50-day, 200-day is angled up. Just looks like it wants to come down to this 200-day. This isn't oversold yet. Okay. So it looks like it wants to come down to here. It can come down all the way to $20. Let's look at Mercado Libre. This is the Amazon of Latin America. Okay. I'm involved in all of if it's the Amazon of your company, of your country, I'm invested in it. It's doing extremely well. On a tape where the market sold off, it looks like it wants to hit the 50-day, maybe get down to this 200-day. Okay. All right. So what is this beta? 1.4. That means it can drop 28% in this environment. If it drops 28%, where is 28%? If it's close to that 200-day moving average, guess who's going to put an alert there? Joel. What does that say? Dang, why is it not working? 200-day is 22%. 28% is going to be right around here, $1,470, right around that $1,500 range. So Joel's going to set an alert right there. That's probably where it's going to go to, right around this 1,500 range. That's about 28%. Do I think it get here? Yeah, I'm going to just set an alert there first. I'm going to get alerted by sound, and I'm going to get alerted by mobile. And when it gets to that value, I'm going to get alerted. Let's look at Moderna. Moderna, one of the fastest growing vaccine companies. We've been telling you to buy this company when it was $10 billion. It's now 170. You done made 17 times your money. All right. 200-day. This is a stupid bullish company. The options on this were obscene. People made fortunes off this company. You should have, I mean, why? We in a pandemic. How are you not buying vaccine stocks? This was like the number one vaccine stock to buy to the upside. This and Novavax. Okay. So looks like it's coming in. It's not going to really, like the beta here doesn't really show you what it actually has done, because for a long time, for 3 or 4 years, it really didn't do anything. It just started popping. So you have to think, if this stock can go from 220 to 500, it's a high beta stock. Anything that can double, this is my rule, any stock that can double in value, any stock that can double in value, any stock that can double in value in less than a year is going to drop 50% or more the following year. Period. This stock will drop to 250 at some point. Okay? And that's where I would want to buy this stock. 250 is just going to take you down to this 200-day moving average. Okay? So I'm going to set an alert right there. But it's a bullish stock. I don't have to look at a month chart or a week chart to see that it's going from the left side of my screen to the top. Microsoft, good old Softy. Softy's been giving you, look at these easy money. I don't know why y'all don't like making the easy money. Y'all just make investing hard. Look at this. Look at this beautiful chart. Look at it. It's so beautiful. It hit the 200-day in March. We ain't seen the 200-day moving average since the March lows. Y'all see that? We ain't seen it. Microsoft ain't seen the 200-day moving average in over 20 months. So if you can't get in at the 200-day, trader said, well, dang, if I can't get in at the 200-day, let me try the 50-day. Well, it hit the 50-day, hit it here. You would have made money on options. Easy money. Easy money. It hit here. It struggled a little bit. It hit the 50-day moving average September the 4th. It didn't come back to break even till October the 1st. You had to sit in it for about 30 days. But it didn't really break lower than these lows. And then it just started to take off and went up. Gave you an opportunity to get in here. Gave you an opportunity to get in here. Gave you an opportunity to get in here. Gave you an opportunity to get in here and here. Gave you an opportunity to get in right here. This joint ran off. This joint ran off 1, 2, 3, 4, 5, 6. In the last year, it ran off 8 or 9 trades in a row. Look at that. And it's Microsoft. And guess what? We hitting the 50-day moving average right here. I think we go lower though. I just think it because it's September. Like I made a lot of money this year. I'm not even thinking about trading no more. I'm thinking about investments. And I'm sure the pension funds and mutual funds that are up 20%, guys, they're not thinking about making fast money no more. They've already made their money for the year. They're thinking about what they're going to do next year, and they're positioning themselves now. MicroStrategy, also involved in crypto, but do your due diligence to make sure. Hitting its 200-day. Hitting its 200-day. Decent beta. Stock is down over 50% from its highs. If you're thinking about buying it, this is when you buy it. Can it go lower? Yeah, it can go to 469. Did it break through the 50-day? Is it exhibiting patterns that you like? It hit the 20-day, 20-day, 50-day, then it struggled. 200-day, 200-day. Remember, that 200-day is strong, guys. Y'all see how strong? The 200-day is strong. Strong. Okay? It's hitting its 200-day again. It makes sense that it's at its 200-day on the biggest drop in the last 6 months in the market. All right, Norwegian Cruise Lines. I started to buy this as soon as the 200-day moving average started to angle up. Soon as I started seeing it angle up, Joel got in somewhere right around here after it hit his 50-day. But now Joel's at break even. So what is Joel doing? Well, I like the company long term. I think at some point the cruise lines are going to do well. I think we're closer to the bottoms than we are to the tops. We went oversold here, and a bunch of traders invested in it. I believe we don't really break lower than this $21 range. If we do, I might think about either buying more or getting out depending on what the news is at the time. Okay, but there's my alert. Netflix. Boy, y'all gonna be mad at this one. Look at all the times you missed out. 200 days. Let's just look at the last year. Just the last year. Y'all got 57 indicators trying to tell you when to get in and out of stuff. And old Jolie Joel is coming over here and just saying, all right, I'm gonna buy here, 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 I'm gonna buy here. Then it sold off for a while. Ooh, it hit the 50-day, $500. It didn't get back there until what, September the 9th, all the way to September the 30th. You struggled for 21 days and it made you money. Then this was a struggle period for Netflix. I get it. From October 2020 all the way to here. But then this is March, this is January. This is January. Okay, I see it struggling. 200 day strong. 200 day sat underneath it. Hit its 200 day and 50 day and 20 day at the same time. You rarely see that. You rarely see it where it hits all three at the same time. That's why so many people bought it. And now we up here. But it looks like it wants to come down to this 50 day, maybe even a 20 day. It's got about a 1.0 beta, so it's going to drop about 20%. Let's see how low 20% is. 20% is going to put you, 20% is going to put you, well, that's about 14%. So, I think it can drop 14% back down to its 200 day, and that's reasonable. That's reasonable for something that's down, that's got a beta of 7. That means it can drop 7%, dealing with the beta 14%. Well, guess what? That's 14%. That puts you right in that area that I think traders will buy it at. All right, give me a second. I just want to make sure you guys are still on. Make sure there's no more flying roaches in the house. I ain't seen a roach in the house in like 6 months. I need to go call Terminex. All right, NEO, Chinese stocks. Stay away from these stocks for now if you're thinking about getting in, okay? I think it can get down to this $30 range. Well, what is NEO? NEO is the Tesla of China. But we're staying away from Chinese companies at this time because they might get delisted. Plus, they're going through a rough patch over there. So I'm not going to really look at it too long. The 200 day is angled down, not good. I think we easily see 30. But I got an alert down here. Why? Because of this gap fill that never filled. Let's look at Nike. Good old Nike. How did you not make money in the last year when you could have just bought Nike? Just do it. It went oversold right here. I bought a lot of Nike during this period. Then it went up, down, up. And then all it did was it gave you a chance to buy it at the 50 day. It gave you a chance to buy it at it struggled at the 50 day here. But it didn't struggle at the 200 day. Didn't struggle here at the 200 day. It sat at the 200 day for about 2 weeks. And then it blew up. Okay? That's Nike. Now we're approaching the 200 day. This gap never filled. I kept telling everybody this gap was going to fill. And at one point, even though it was at its price, it is going to come down in price. I've been telling everybody. This is where it should come down to. Let's look at NVIDIA. NVIDIA is the Beyonce of the technical space. This is the most, like if you want to know all the action, this company is involved in everything technology. Anything that's technologically advanced has this equipment in it. Cryptocurrency, mining equipment, electric cars, virtual reality, computers, phones, like everything, right? And because our whole economy and all of these different, the technology that we have, we want them to be interoperable, meaning that they can communicate with each other. This is the leader. And there's a semiconductor shortage. I actually think this company gets to $1 trillion in market cap. I believe NVIDIA becomes one of the 5 horsemen. Like, you know how FANG is Facebook, Apple, Netflix, Google. I believe NVIDIA becomes part of that special crew, and it's on its way. Okay, love this company, and I mean, look at this. Everybody else loves it too. Every time it hit the 20-day, it never even reached the 50-day. It just kept giving you money at the 20-day. Then it struggled here at the 50. No, that's the 20-day. Never got to the 50. Got to the 50, sat on it for a little bit. But look at what it did. It just sat on the 50. Then it started to go higher. Then it dropped to the 200-day, gave you a chance to buy. That's March 2021. It looked like it was about to go oversold, made a whole bunch of money in options, hit the 200-day again, hit the 200-day again, hit the 50, got close to the 50. Now we're hitting the 50 again. But I don't think this one holds. How much do I think it can drop? 24%. Joe, how did you get that number? I just multiplied this times 2. 12 times 2 is 24. Well, 1.2 times 2 is 2.4 times 10 is 24. 24%. It's going to drop 24%, period. I don't believe that. Well, go back and look at all your stocks and see if they've ever done it. 24% is going to put you right around that's 9%. That's about 24. I think we go to the 200-day moving average again. Even with a semiconductor shortage. Boy, oh boy, I'm going to buy like 12-month options on that bad boy. And then y'all going to be mad 12 months later when I get crypto Bitcoin type moves in NVIDIA. Planet 13, cannabis company, oversold. Okay? No support. If you're thinking about buying it, this is where you buy it. 200-day moving average is angled up. It went through the 50-day and the 20-day, and it's oversold. It got oversold on September the 13th. If you want to take a shot at it, it's only $1 billion company. These are the types of companies you make fortunes off of if you hold them for 10 years and the cannabis space really starts to move. Peloton, y'all see how I said I sold 49 shares? So mad. But guess who's licking his chops? All I had to do was be patient. Yes, I sold it back here. The day that it sold off because people were dying or babies were dying because of the equipment, I sold it. I thought that was negative news, but what I didn't notice was that it was oversold. I sold it here at the lows, and then I've been mad this whole time. But guess what? We're coming back to that 89 range, and I'm going to rebuy it at the same price I bought it at. And then everything will align in my world, and I won't be mad anymore. Okay? I got a big fat alert set up to buy some at 89.5. Let's look at PayPal. PayPal's approaching its 200-day. PayPal has a 1.0 beta. That means it's going to drop 10%, but in a environment like this with the volatility index higher, it's going to do doubles, so it's going to drop about 20%. Where is 20%? 20% is going to be right around here. That means it's going to probably overshoot and get to this support level right here. Okay? Because some of you guys just buy it here at the 200-day. I'm like, guys, that's cool, but that's only 14% off. That's not making a guy like me lick my chops. If this stock ain't at least 20, look, in the real estate game, everybody knows all real estate home flippers love to find property. Even homeowners that buy property love that 20% number. I don't know what it is about 20%, and investors, we love that number. If the company ain't got 20% equity in it, Joel don't want none of it. Okay? If you bringing me a house and the appraised value is 100, I want it for 80 or lower. If you bring me a house that appraises at $1 million, Joel wants it for 800,000. I want 20% of equity. I want the same thing in my stocks. And y'all guys should also feel the same way, only if it has a beta of 1.0 or higher. You're not going to get a 20% drop in something like a Walmart or a Heinz if it has a very, very low beta. All right, but 1.0 or higher, expect 20%. Just like, the government expects taxes. All right. Race. This is Ferrari. We're not even gonna look at this one. It looks like it's at its 200-day. All right. Roblox, very hot stock. It just IPO'd. It doesn't even have a 200-day moving average. I think it can get down to here. It's a $44 billion company. Has a 1.0 beta. So has it dropped 20%? Well, you do the test. Has this stock dropped 20%? Yeah, it's dropped 28%. So you got some equity in it. If you decide that you want to buy it. Riot blockchain. This is involved with cryptocurrency. Well, we're sitting at the 200-day moving average. We're sitting below it. Okay? So, if you're interested in buying it, where's the highs? Jeez. It was higher than 80? What price did this thing actually come from? I don't know. That might be a mistake. Huh. We're just going to say 80 because that was so long. That wasn't that long ago. But we're just going to say that these are the highs. 80. Okay? So you can make a lot of your money. It dropped from 80 to 30. It dropped over 50%. Guys, do y'all see this beta? This is the most ridiculous beta I think I've ever seen in my life. I've never seen a beta literally higher than, even Norwegian had a 3.0 beta. That's stupid. That means on average, during normal conditions, this stock drops 37% from its highs. 37. Under just a little bit of beta, this bad boy dropping 75%, period. You guys got to understand that so that when it drops 75%, you can't be thinking that something is wrong with the company. Nah, that's just what this company does. It's going to drop 75%. But when this bad boy goes up, it went from 20 to 90. It's going to make you 400%, 600% when it starts to run. But it's going to drop 75%, make everybody mad, get all the investors out, and then that bad boy runs, and it's small. It's a $2 billion company. But Riot Blockchain is involved in crypto. Well, it's down 75% If you want to buy it as an investment, guys, don't put 10% of your portfolio in it. 1% into crypto. 1%. Okay? 1%. Let's look at Roku. Roku. I had a little bit over 10% of my portfolio invested, my total assets invested in crypto. But I just recently sold half of that. All right. So Roku, streaming. You into streaming? Number one streaming device that's out there. If we sit at home, what are we going to do? We're going to use streaming products. Okay. So how do I analyze this quickly? Because some of you guys are still reading on one company and deciding if you're going to buy that company because you've been reading about it all night long on 50 different forums. Which is cool if you're trying to buy a fundamentally good company. I'm not going to knock you guys' hustle. But you still should be able to quickly, technically look at it. All right, it's oversold. It's got a rising 200. Does it exhibit a pattern? Before you buy something, guys, at the 50 or the 100 or the 200 day, let's see if it's exhibiting a pattern where traders are actually buying it at those levels. Don't just take my word for it. Look and see, is it hitting the 50 and people buying it? Is it hitting the 20 and people are buying it? When it hits the 50, how long does it take before it gets higher? Because if you buy it and then you call me the next day and say, Joel, my stock is down. I don't know if I should buy it or if I should buy more or sell it. I'll say, well, what's the average amount of time that it stays underneath the 20 or the 50 day? And when you say, I don't know, then that means you're gambling. How long does it typically stay under the 20 day? 3 days, Joel. Well, then after the third day, maybe that's when you want to sell. It hits the 20 day, 1, 2, 3 days, then you buy it. It hits the 20 day, you count 3 days, 1, 2, 3, then you buy it. Because it's exhibiting 3 day patterns. 3 day, 3 day, 3 day. I don't know why you guys don't do that. When it hits its 50 day, how long does it stay underneath the 50 day or the 200 day before it goes higher? Well, when it hit the 200 day here, you only had 1 day to buy it. When it hit the 200 day again, you thought it was 1 day, but then it went lower. That should have told you that it was probably going lower. If the last time it hit the 200 day and it bounced, and it didn't bounce like it normally does. Here, it hit the 200 day. 1, 2, 3, 4, 5 days, it was up. So, when it hit it here, 1, 2, 3, the longest it stayed underneath this 200 day was February 2020, all the way to April 2020. That means that was during COVID. Well, this is COVID too, but this was during when we were sitting at home. So if during the worst period of time, a streaming device company stayed underneath its 200 day for 60 days, I promise y'all 60 days is the maximum that it's going to stay underneath its 200 day. You might want to start buying it. If you see it underneath it for 30 days and it's still angled up, you need to buy it. Here, it hit its 200 day. Let's go 60 days out again. April to May is 30, to June is 60. Let's see what it did in June. Oh, look at there, Joel. It started to go up in value. Y'all make trading hard when the patterns are there to show you what it's doing. And mind you, I ain't looking Roku. I just literally do what I normally do. Okay? So if it hits its 200 day again, you kind of know about how long. If it stays underneath it, you still might have another 30 more days because it hit the 200 day, August the 16th. Well, September the 16th is 30. October the 16th is 60. Well, guess when Joel will probably be buying this stock. If it starts to go back up and it's right around mid-October, this stock probably about to take off. All right, let's look at Shake Shack. We almost done. We in the S's. We almost done. Let's look at Shake Shack. Shake Shack is a $3 billion company. All right, it got oversold right around this time. It's trending down. Now, why do I like Shake Shack? Because Shake Shack is like a McDonald's back in the day. It's only a $3 billion company. McDonald's I'm surprised McDonald's is not on this list. McDonald's is a $178 billion company. Shake Shack, $3 billion. McDonald's, $178. Even if Shake Shack became 1/3 the size of McDonald's, which puts it right around $50 billion in size, that means you make about 14, 15, let's just say 16 times your money. 16 times $1,000 might be worth 16 grand one day. 16 times your money. You take shots at companies like this that are growing, that have high beta. It's growing at 17%. It drops 17 and 30% also. But when it goes up, guys, woo, boy, it goes from 59 to 140. That means if this bad boy starts to take off again, you can make 3, 4, 5 times. This stock can easily go to 400 billion. And if it goes to 400 billion, y'all know that this stock is only gonna be $10 billion in size. You're talking about a restaurant chain that everybody has heard of. It's only gonna be worth 10 billion? That's why I keep investing in this company. These are the companies that make you wealthy in the future, but you got to hold on to them. All right, these are the type of companies you put in your kids' accounts, and they can watch we talked about Wingstop the other day. Why y'all think Rick Ross is buying his son Wingstops? Because Wingstop and Shake Shack are $5 billion company. This is $3 billion. Shake Shack is a $5 billion company. 5 billion. That's nothing. There are people out there that have more money than this that can buy the whole franchise. You put Beyonce and Diddy and Nas together, they can buy all of Wingstop with their net worth. Companies like this shouldn't be small enough where 3, entertainers can own the whole chain. Every stock that's out there. That means this company has growth potential. It shouldn't be worth $5 billion. This company should easily be worth $50, $60 billion with investor funding. There's no Wingstops on every corner. There's no Shake Shacks on every corner yet. These are the new Subways, all right? And I keep telling everybody that, okay? This is how you make money, not looking at the share price. The share price is an illusion. It's an illusion. This can be an $1,800 stock easily. And all they'll do is a reverse stock split and make the stock go back to 180 after it grows 10 times its value. That's the trick that they do that y'all haven't figured out yet. Okay? Anyway, let's go back to I spent too much time on that. We looked at so Wingstop. Look, Wingstop was only down 0.8% today. On a tape where all of these stocks were selling off, this stock hitting all-time highs. It hit an all-time high yesterday. But yet y'all don't want to. It's $180, Joe. I can't afford that. Well, you don't want to make money because this company has growth potential. Let's look at Shopify. I think we looked at it already. It's the Amazon of Canada. It can drop here. It can drop here. Why do I love it? Because it's 179 billion. The Amazon of Amazon and Amazon of America is worth 1.6 trillion. 170 billion, 1.7 trillion. That's crazy. Shopify is only 1/10 the size of Amazon. Even if it grew to half the size of Amazon, right? You're talking about making a lot of money, 5, 6, 7 times your money. All right, let's look at Snapchat. I ask this question all the time. Which company is bigger, Snapchat or Facebook? Why is Facebook not on here? Let me add Facebook. Sorry about that. We got to go back and look at, well, we'll look at both of these at the same time. Which company is bigger, Snapchat or Facebook? Oh, it's Snapchat. My kids use it more than us. Wrong. Snapchat's a $100 billion company. Facebook is a $1 trillion company. That's right, guys. Facebook is a $1 trillion company. What? Yes, it's 10 times bigger than Snapchat. So, if your kids are using it and you think Snapchat can grow, even if Snapchat got to half the size of Facebook, you're going to make 5 times your money. That's a 500% return. Stop looking at the share price, guys. Y'all need to start looking at the market cap and looking at beta. All right, I know the beta says half, but this company has growth potential. But if you're trading it, what is it going to do now? Well, when it drops to its 200-day moving average, which it's going to do, it's going to be down about 23%. That's reasonable for a company like this. All right, that's where investors are going to buy it. I'm telling y'all because that's where I'm showing y'all where I would buy stuff. Where I buy stuff is usually where these big time investors that are going to move the market are going to buy as well. All right, let's look at let's go back to Facebook and then we'll go back down. I'm a little bit over. Facebook, $1 trillion company, it hit $1 trillion, and now people are selling it off. Every single one of these companies, when they hit $1 trillion, guys, they sold off about 20%. Because $1 trillion was the magical number everybody was waiting for Facebook to get to before they sold their profits. They hit $1 trillion, it sold off. Now we're at this support level. I think we go a little lower. I think Facebook drops about 25%. 12 times 2. Well, what's 20% off of its highs? Well, 20% is going to, does this every time. 20% is going to put you right around, it gets to the 200-day moving average, guys, we're going to be down 18%. It's a no-brainer of where Facebook is going to. Joe's going to put his little alert here. Then when I make money on it and I say, all right, guys, it hit the 200-day, I'm buying it. But Joe, I was watching The Big Short and they said that, yeah, well, I'm buying. I don't give a dang about The Big Short. When The Big Short happens, The Big Short will happen. But Joe's going to buy it when it hits this 200-day moving average. Because it's September, October. I've been doing this for the last 10 years. We ain't seen no Big Short yet. I'll wait for The Big Short when The Big Short happens. All right? So, and when it happens, who cares? Everything's going to go down in value anyway. Your house is going to be half price. Cars are going to be half price. My portfolio will be half price. I'm still going to be, my buying power is still going to be the same. Quit being afraid of the market selling off, guys. Y'all too scary. All right, that was, oh, wait, we did Snapchat, right? Snowflake. All right, at one point, it was the fastest growing company in America, okay? It hit a low of 184. Rose all the way to 323. I'm so mad I didn't buy it down here. All right. Where does it look like it wants to go to? Looks like it wants to drop to the 50 day, to 20 day, 50 day, 200 day. What is this beta? 1.2. What does that tell you? It's going to drop 24%, period. It's going to drop 20%. So if these were the highs and you think it's going to drop 20%, where's the 200-day moving average? 18%. So if you know it's going to drop 20% and you know the 200-day is 18% away, what is it more than likely going to do? Go to its 200-day moving average. It's overbought. Let it sell off a little bit. Space. You went to Virgin Galactic and Richard Brand. And Richard Brand's the, Virgin Records. He invented Virgin Records. He's the cat that got his own island that Mariah Carey be visiting. He got rockets that he been flying. You remember when they had, he was the first person to take a commercial video. He had like a 18-year-old on the thing. I think he had a teacher. Well, you got billionaires freaking going into space now. All right. Well, Space's beta is 1.6. What does that mean, guys? That means this stock, on average, with a little bit of beta, is going to drop 30% every single year. 30%. Wait until it drops 30%. So, when it hit all-time highs, you know it's going to drop at least 32%. At least 32% was the minimum it was going to drop. Well, we knew that when it was this high, 32% was like right here. And we were like, whatever. That ain't even where the 50-day moving average is. So when it got down to the 200-day, it was down 58%. Then it got all the way down to about 75% off. That was the March lows. Then it rose. It didn't quite go back to its highs, and then it started to drop. Now, sorry guys, the beta was higher there. So I'm wrong here. When the beta was above 5, that means it drops 3 to 4 times its beta. So if its beta was 16%, it was supposed to drop 60 to 70% during COVID. Well, the beta wasn't as high during this period. So when it started to drop, now it should drop about 32%. So when it dropped to the 200-day moving average, that was about right. When it dropped, we're now about 56% from its highs. Okay? It automatically drops 32, so you're about 20, you got about an extra 20%. That's a buying opportunity. If you believe in, now remember guys, when people start going to space, they're gonna pay like $50,000 to $100,000 to go. And they're gonna have like, they supposedly are gonna have takeoffs like weekly or monthly. So they're gonna be able to make a lot of money off a commercial flight into space. So if you're into something like that, it's a $6 billion company. It's got room to grow. All right, Spotify. All right, I'm going to go really quickly through these. Whew. Spotify, 200-day, number one streaming. Somebody asked, "Are you going to save this live?" Yeah, I'm going to leave this in the room. You can look at this video 5 years from now. Okay. All right. So Spotify, sitting underneath the 200-day. What I don't like is this 200-day moving average is angled down. I don't like that, and it got overbought. Y'all see that? I do not like seeing it get overbought and it's underneath the 200-day. That's not a good sign for Spotify. A company like this is supposed to do well during conditions like this, so I want you guys to be careful on this one. It is a $45 billion company. I actually don't know what to do with this one. I think it can get down to this price, but it can easily hit here and go higher because it's already down 387 to 237. Is it down 20%? It's down more than 20% already. It's down 40%. So I can't really, if I was a betting man, I would just buy it here and just say, forget it, Joe. This is one of them ones you buy it for your kids and just leave it in their account. It's 230-some. Buy a share or two, go on to the next stock. All right, we looked at the SPY. Let's look at Square. Square is the Cash App. Okay, and it's the anytime you got small businesses, y'all ever go to an event and it's like outside and they got this machine and then they tell you to swipe it and it's like a white machine. Chances are that's a Square product. Okay, so Square is also involved in cryptocurrency, so a lot of people love buying this, and it's been a very I mean, this stock pays out like look at this. It hit the 20-day moving average and it just hits the 20-day and just made you money. Hit the 50-day and just made you money. Okay? I mean, it was so consistent. It broke its trend, hit its 50-day, made you money. Made you money. Every time it hit the 50-day, made you money. So this is one of my favorite companies. Okay? And I load the boat when it hits the 200-day moving average. I mean, I literally throw a whole bunch of money at it. It's one of the most consistent plays I love making. All right. And look, it just hit the 200-day again. But it's not oversold yet. So be careful on this one. Its beta is ridiculous. What does this mean? That means Square sells off 50% every year. Every year. Every year. 289, probably going to see 140 at some point. And that kind of sucks. All right, because I think I'm up 600%. Just on my last investment, I'm up 600%. I'm up 600%. It's crazy. Okay? So be careful on this one. All right. It's 100 billion. I think it can grow, but be careful. All right, we're gonna skip that one. Let's go to Target. Well, let's not skip it. This is Smith and Wesson. There was a gun shortage. When there was that gun shortage, I told y'all to buy. Shoot, I went out and bought like 9 guns. Don't break into my house if you don't want to shoot out. I got pit bulls and guns. All right. And my sons are shooters too, so they can shoot too. They'll shoot you right in your ass. So be careful if you try breaking into my house. All right. But let's say, hold on. We got a 1.0 beta. So, all right, we hit the 200-day. It's a bullish stock. We hitting the 200-day right now. So if you believe in guns, you want to invest in that market, this is probably a good time to buy. All right, let's see how much it's down. It's a 1.0 beta kind of stock, so you want to buy companies like this when they're 20% off. And guess what? We're 50% off. So it's more than lost its value. So I would, if you're investing in something like this is a good time to invest in a company like this one. And it looks like it's oversold. This is a great 1 year to 2 year play right there. All right, let's look at Target. We're almost done. Target, I didn't think I can get through 50 stocks. I think we did more than 50, but that's fine. 200-day, made a whole bunch of money on options. Y'all remember, I think I made like $1,700 off of a $300 option play. I was up $1,700 24 hours later. All right, love Target. Target also, 20-day moving average, buy it, or 50-day moving average. But look, 50-day, 20-day, but looks like it's selling off. Where are we going to go to? Probably down here to this 200-day moving average. Now, is that realistic? Yeah, it's realistic. Why? Well, let's look at the beta, about 1%. That means Target to sell off 20%. Well, how much is 20% off? Because Joel only buys stuff when it has equity in it, at least 20%. Well, right now, it's off 9%. 200-day, 20%, perfectly. Y'all know when they hit this price and they saw this 200-day, that's why they sold, because they knew it was probably going to come down 20%. Y'all see that? That's where Joel's going to buy it. That's why I'm going to set an alert right there. Let's look at Tesla. See what Tesla's doing. Tesla was also a company that when it's bullish, it's bullish. When it's bearish, it hurts you. But look at that. Hit the 200-day moving average perfectly. Let's say you missed it. 20-day, 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 20-day. Never got to the 50. Hit the 50, made your money the next day. Hit the 50, made your money the next day. Hit the 50. If it hits the 50, guys, give yourself 50 days to make money. 50 days. 200-day, give yourself 200 days. If it hits the 20-day, give yourself 20 days. All right? That's how I use. That's how I know how far to go out. If I'm using the 20-day moving average, I'm going to go out 3 weeks. If I'm using the 50-day moving average, I'm going to go out 2 months. If I'm using the 200-day moving average, I'm going to try to go out, it's a little bit less, about 3 months minimum, but I want to try to go out 6 to 12 months. I know options cost a lot of money 6 to 12 months out. So if you're just buying the stock, you're just going to have to wait about, 3 months before you start profiting. But look how fast you start profiting. Even if you bought it the very first day it hit the 50-day, which was October the 22nd, it started to get bullish 30 days later. Remember, I told y'all to go 50 days out. If you would have bought options 50 days out, look at all this money you would have made on Tesla. Even if you bought it here and you went 50 days out, June, August, September, that's February, March, April. At least by April, which was 60 days later, you broke even. But the 50 days started to angle down. But then it hit the 200 day. How many days did I say go out for the 200 day? 200 days. All right. There's 30 days in a month. All right. 3 months out. That's about 100 days. I get that. I like you to go 6 months. 6 months going to give you about 90 days. No, not 90, 180 days. All right. Which is close to the 200 days. That's why I like for you guys to go 6 months out. Well, if you bought it on this date right here, May the 12th, it started to go bullish right here. All you had to do was wait 30 days on your options, and then it was just profit. It was a profit monster after that. You wouldn't even be worried right now. Just by using this, y'all be using 15 indicators going back and forth, and I'm not gonna rant. I'm gonna get to the rest of these stocks. All right, Twitter. Y'all thought I was about to go on a rant. All right, so Twitter, 20 day, 20 day, 50 day, 50 day, 50 day, 200 day. Use the what would Joe do? You remember when I showed y'all the what would Joe do method of entry? You would have made money. Now it's just come back and it's still higher than where you would have entered. Why did Joe use the what would Joe do method? I don't even know why I wrote that there that day, but obviously because it was oversold here and it started to go bullish, and then you could have entered that trade right around there. I told you to buy. This was one of them trades I told y'all to buy. I ain't even looked back at it. I ain't even remember that I had this up. And look at how much money I made some of y'all. Okay? Hit the 50 day, hit the 200 day. Do I think it can go lower? Of course I think it can go lower because the market is starting to sell off. What is the beta? It's less than 1.0. So, if you get about a 10% or a 20% drop from a swing high, that's fine. What is that value at the 200 day? That's about 12% right there. Well, Twitter ain't going to drop 12%. It's going to drop more than that. Probably down here to this 32% range. That's what I'm thinking it's going to go down to. So Joe's going to set him a little alert right there. Because I like Twitter. All right. Use U1K and U1. All right. This is a double. I don't have to look at both of them because they're going to exhibit the same pattern. U1 is a black-owned investment company. Okay. So they invest in a lot of stuff, right? But it's a black-owned company. A lot of people are buying it. Well, we're buying it, guys, because look at the value. It's a $380 million company. I normally don't encourage people to buy companies that's less than $1 billion in market cap, but it was black-owned. I was trying to give back. These two companies usually start running right around Juneteenth, so y'all need to write that down. Right around Juneteenth, all black-owned companies do well, and then they sell them off on June the 19th. All right, they sell it into the news. So compile a whole list of black-owned companies, and right around May, start buying them. Sell them in June. Okay, well, don't sell them in June. I don't want y'all to sell these black-owned companies, but if you want to know the patterns, that's what happened. Look at here. Y'all see this June? Y'all see this June? Y'all know when it hit its highs? June the 11th. Then Juneteenth was right around here. All right. So it hit highs. It knew that everybody was buying black-owned companies, and then they sold off of Juneteenth. I told y'all it was going to happen. Okay. So it's hitting its 200-day moving average. I don't even need to look at the charts. Y'all need to buy this one just because it's down a lot of money. We looked at the VIX. We looked at Wingstop. Let's look at Walmart and Zoom, and then I can go and watch football. All right, Walmart. $400 billion company. It's got the lowest beta out of all these companies. Now, why is this important? Because out of my whole list, if I had to pick the most conservative play, because a lot of you guys, when I threw $100,000 at Walmart, y'all said, Joel, why would you do something like that? That is so idiotic. And I'm like, no, it ain't. Walmart ain't going nowhere. You think Walmart gonna go to zero because of the pandemic? Walmart does well during pandemics. Walmart is just a baby Amazon. It's an old baby Amazon. That's all it is. But it's the most secure, stable company out of my whole list. It's that one that I gotta go to. If I just gotta invest in something and hope that it doesn't go to zero, it'll be Walmart. I love buying Walmart when it hits the 200-day moving average. Because look at what happens every time it hits the 200-day. All right, we're gonna go all the way back to 2016. For 5 years, Walmart's been bullish. For 5 years. It's been bullish longer than that. This is when Walmart started to really get bullish. 2016. Why? Because they started to follow Amazon's principles. And they said, we're going to go e-commerce. We're going to go buy these smaller e-commerce companies that can help us build our brand on the internet. And then once they started doing that, people like me started to put money into it. Every time it hits the 200-day moving average, you could have bought options 6 months out. You would have made a killing on it. Y'all see that? You would have won there. It hit the 200-day again right here. And you struggled for a while. You struggled from March all the way to August. March, April, May, June, July, August. You had to wait 5 months. But you still made money 6 months later. Okay? You still did it. Then it hit the 200-day again. That's why I say go 6 months out. Then it hit the 200-day moving average again, right here. This was the March lows. Then it hit the 200-day moving average again, right there. Then it hit the 200-day moving average again, right here. So from 2016 till now, you had 100% chance of making money 6 months later. 100% chance with a low beta stock. You know why? Because people like myself that are trading, that have to go to those go-tos, we know what to go for. We're going to go for the Targets and the Walmarts first. And then if they're stable enough, we'll start reinvesting in the other companies. You got to think like the wealthy if you want to be wealthy. All right. Zoom, last one, high beta. It's the opposite of Walmart. Okay. It's the opposite. This company moves 3 times as much as Walmart. That means if Walmart's down 10%, this company's going to be down 30. If Walmart's down 20, it's going to be down 60. But it makes way more money to the upside than Walmart. See, Walmart is old and boring, but it ain't going to make you're not going to be able to put up $100 and that $100 be worth $600. Walmart ain't giving you those types of gains because its beta is too low. It ain't growing no more because it's a $400 billion company. Now, it can grow to $1 trillion because that's where Amazon is, right? Amazon's 1.7 trillion. I actually think at one point Walmart's going to start growing again. But it's not going to be because of their retail. It's going to be because they decided to do everything online, and they should be competing with companies like Amazon. Amazon has a monopoly on delivery. And we all know this, and the government ain't even breaking the company apart. Walmart should have been your other option. Just like a Uber, at least with a Uber, you can go do a Lyft. If you go to the airport, you can do Delta, you can do American, you can do different airlines. But when it comes to delivery service, it's Amazon, Amazon, Amazon. They got a monopoly. So Walmart has room to grow. But let's look at Zoom. Last one. Zoom is oversold at the 200-day moving average. But the 200-day moving average is angled down. So this is a tricky one. You know why this is tricky? Because they're based out of, I don't know if they're, I think a lot of their operations are out of China. China is really hurting this company because it wants to grow and it has a relationship with a lot of these different companies. Like every company, like even when I'm doing stuff with my kids, they got 2 options. You can use Zoom. They'll start the meeting off on Zoom, and then give you a link to do what's it called? Microsoft Meets, which is interesting to me. So you're using Meets and you're using Zoom. So I'm seeing that people aren't just using one and not the other. They're just using all of them, right? So Zoom is gonna get used, guys, and Zoom is an $80 billion company, all right? So it's not so big that it's still not investable, but it did grow. It grew a lot during COVID. It went from $69 to $600. It almost made you 1,000% return. Well, people are taking profits. And it's a high beta stock. So is it down 30%? Yeah, it's down 51%. So if you were thinking about buying this, y'all see all these alerts I have, you might want to consider buying something like Zoom. All right. So again, oh, and it's oversold. So those are the 50 stocks that are on the What Would Joe Do index. If you want your charts to look like mine, all right. If you want your charts to look like mine, you can go through my app. You can go through my app, download the app. It's free. The app is free. Or you can go to my PayHip and make sure that you can download the individual video. You get to keep that video forever. I do have a webinar that's coming up. The webinar that's coming up is, for webinar week is in October. It's not the first week because I have jury duty. All right. So I'm going to do it the following week, October the 12th through the 14th. The link is there for you to sign up if this went over your head. A lot of what I taught today is what we teach on day one. I haven't taught you the day two or the day three things because it's options and day trading. You're going to have access to all three videos for 30 days for 65 bucks. So go ahead and buy it. I should have charged y'all 10 grand or 50 grand like these other cats is doing. But I'm not going to do that. I want you guys to learn it. So I'm coming to you guys from Decatur, where it's greater. You can watch this video a million times if you want. Share, share, share. And I'm out of here to go watch football. Later.